Good morning and welcome to The Street Live. It's Friday, December 18th. I'm Catherine Ross and I am joined as always by Jim Cramer. Jim, this is our final episode of 2020. So what are
I
you going
know.
to be watching in the markets as we await the FDA's decision on Moderna's EUA?
All right. Well, I'm watching that. I think pressure that's being created by the addition of Tesla into the S&P and the rebalancing. The bigger companies are all selling off, and I think that's money that's going to end up going to Tesla. So the artificial nature of the sell-off cannot be avoided. I'm particularly looking at Apple. We had two really incredible notes that were very, very positive, and it just didn't matter. And that's because I think that Apple is under liquidation to put money in to Tesla. It might be an opportunity for people to buy Apple.
Jim, during No Huddle last night on Mad Money, you pointed out that the 1918 pandemic actually led right into the roaring 20s. For investors looking to start reallocating their positions to make a play based on the post-vaccine boom, where do you want them to start?
Well, I think that you have to just take a hard look at travel, leisure, hotels. I mean, look, I've been looking at Airbnb. I mean, just for Action Alert, and it's kind of interesting. But the number one name is Boeing. Boeing is now. This is very important. Boeing was at 349 in February. Okay, and obviously that is that's a depiction of where it was before the pandemic. But it's down 32% for the year. It is many stocks are already up. It is a huge China play. We know from the note about Apple today that the Chinese are starting to buy a lot of Apple. I think that's post-election. I think that you're no longer going to get in trouble buying an Apple phone, given the fact of how much Trump was hated there by the PRC. I think the PRC, and I feel that this way because of speaking with David Calhoun, I think the PRC is going to put in some gigantic orders for Boeing. And I think it's going to sop up a lot of supply. I also think that once we open up, I think people are going to not say, oh, maybe I'll take a trip. I think they're going to say, you know what? I got a second chance in life. I'm going to do something. And that's why I think that Boeing is the number one name.
I'm looking at Nike right now. They report earnings after the bell. I want to save the details for Action Alerts Plus for our exclusive show over there. But what do you want to hear from them?
Well, I want to hear that the direct-to-consumer model is still very much right. You remember, the direct-to-consumer model is all about disenfranchising the intermediary and making more money for Nike. I also want to hear that business in China is even stronger than they thought. I don't want to hear that that America's slowed down again, which is, America's been terrible. I want to hear that direct-to-consumer saved America, and that's what you need to hear. And I think that there's real reluctance and resistance right here, given the fact that people think America's can't be that good. I agree with that, but I do think that there's reasons to be able to be hopeful about China. Would I buy some if I didn't own any? Yeah, I would.
Looking at a sector that hasn't been doing so well is, the restaurant industry, Jim. And yesterday when you and I were talking, you told me that if Yum would be a stock to buy if you didn't believe that the restaurants could come back. And this morning your stop trading was Darden. Do you put Darden on the same list as Yum in that case?
Yes, I do. I mean, Darden's really interesting because it was just not good. And yet sellers don't develop, Catherine. That's what I don't get. If you own Darden, why aren't you selling it? It wasn't what we thought. And the answer is that I think there are a lot of people now who say it doesn't really matter what they do right here. What matters is apropos of what you were talking about that I mentioned with Boeing. What matters is how do you sell Darden now, knowing that Olive Garden is going to be one of the surviving restaurants that you sit down and given the fact that a lot of the companies that have restaurants are not going to be staying open. I mean, we all look at the towns we're in and we see coffee shops that are closing. We see luncheonettes that are closing. We see dinner places, trattorias, they're all closing. And they're closing because they still have rent. They still have electricity. They have insurance, workers' comp. And these are all things that they have to pay. No one's saying, listen, here's a break. And so therefore those companies go under and Darden's Olive Garden does fantastic.
Jim, when you scroll through Wall Street bets on Reddit, many Redditors love Palantir. I'm just wondering if Palantir could ever get close to Tesla when it comes to getting these passionate investors in it.
Well, but no, I think because Palantir in the end does secret stuff. And it came at 10. It attracted a lot of people. I know the Reddit people really go nuts for it, but we're not going to really know what they do, and they can beat the numbers, I guess. But Tesla, we all want one, and that's why Tesla was so great. And Tesla became a technology stock, and the guy fell in love with Tesla last November in the year 2019, and it's been a pretty big winner because it's kind of just considered a SPAC for Elon Musk, and then you really get how well it's doing.
One thing that we've been talking about a lot this week is Bitcoin, and this comes as Coinbase has filed for its IPO. So is this a stock to watch as it gets closer
absolutely.
to come public?
Coinbase is another one where if you can get in on the deal, you got to get in. Just get it. There will be people in this new group of investors. They don't really care about price. They care about being in. They don't care about price. They don't care about losing money. They don't care about losing money, then they don't sell. And so your opportunities very rarely come the way that they would have done in another era, where there would be a stock that goes down, people would start selling it. Now it's like stock goes down, and midday they start buying it. So I think that Coinbase can be one of those.
And I just want to clarify, Jim, when you say you can get in on the deal, what you mean is if you can get in on it before when it prices, not at its first trade, correct?
Right. And I think for newer investors, you have to understand there'll be firms that are bringing Coinbase public, and you always hear that say Coinbase it's coming public at 20, and then you see it open at 80. Well, there are people who get it at 20. They tend to be large institutions that do a lot of business. We understand that's what a brokerage house does. Remember, you do a lot of business, and then you're rewarded with some very hot stock. That's just been historically the way things go, and that therefore, if you're not a regular person, large institution at say Goldman, if Goldman's doing the deal, then you're just not going to get your allocations. I call it an allocation. You circle how much you want, and then you get an allocation. So let's say you want 200,000 shares of Coinbase. You'll probably get 50 if you're a great customer, but no more than that. So then it's 2 million. You'll get 500. You can figure out the ratio. You get cut back pretty big. When I was had my own firm, I would say, listen, I want 10% of the deal. That was how I gave them the order, which meant two things. One, that I was going to get a very big allocation, but two, I better not sell it because they would look at anybody with that kind of order to see if I dumped it, took profits in it, whatever.
Jim, this morning you had a really interesting interview with Palo Alto Network CEO Nikesh Arora. You talked about the cybersecurity breaches we've heard about a lot this week. And I'm wondering what kind of action should investors take right now as we reel from the news that the government agencies and some American companies have been hacked?
Well, Palo Alto does bother me because, of course, that we did it. We owned it at one time. We made some money, made good money. But, like many stocks, we did that with Lam Research. But I have to tell you that the company that is, let's say you're really worried, this was what known as an enterprise hit, which is that companies got hit. But one thing I think you should be worrying about is whether individuals are getting hit, which is why I think that this is a Norton LifeLock opportunity. A lot of people felt when it was at 18 that we misjudged, but we've been waiting for what we thought was going to be a hack, and here we got one. And people are going to Norton LifeLock as they should, because that protects individuals, not necessarily the enterprise.
And Jim, one such company that got swept up in this hack, which seems to have started with SolarWinds, was actually Microsoft. So specifically for Microsoft investors, what do you want them to do as they read this news? Well,
Microsoft has pretty much explained a lot about what happened. And I think look, if you touched it, if you have hands on it, it's not great. But Microsoft, I think, is being sold as a $1.6 trillion company. It's being sold in order to be able to pay for Tesla. And so, if anything, I'm a buyer, not a seller.
And we got some good news from FedEx, which impressed with its quarter, handily beating adjusted earnings and revenue. Where would you tell investors to buy this stock?
Now, down 15. That's a big decline. That's down 5%. That's a great level to start buying something. It was a good quarter. Now the stock was up, 89% coming in. Now it's up 83%. You could argue, look, it has to give back a lot of that. I disagree. I thought it was a fine quarter. They had some expenses that had to be met because of COVID. they are on fire because of e-commerce, and a lot of people have been waiting to get in it. Now suddenly it's down 15, and they're scared. I would pull the trigger FedEx. Now,
All right,
just
and with that,
I think UPS is better than FedEx, and that's down a lot too. That may be a better buy.
all right, well, that's a wrap for 2020. It has been quite the year, Jim, and I'm very proud of what we've accomplished, and we'll be back on January 4th. Until then, we're going to head on over to our Action Alerts Plus call for our members-only show. I'm Catherine Ross, and I'll see y'all next year.
Thank you.